What's up, everybody? My name is Wallo, and I'm the professional fact spitter, certified gem dropper, world class dot connector, and welcome to 2022's very first episode of Game Plan TV. And it's an absolute pleasure to be back. I've been gone for a while, and I just want to say to all of our viewers, um, Happy New Year, compliments to the new year. And let's just put out good vibes, good positive energy for the year coming. Um, this specific episode, as the first episode of the 2022, we're going to be putting out a new series, and me and my boy, a very close friend of mine, a friend I've known for a very long time, are going to be putting together a technical series. His name is Brandon Ducci, and he's a very quality Bitcoin trader and cryptocurrency investor as well. So he's going to be teaching a lot of stuff with regards to technicals on the channel. And yeah, without further ado, Brandon, take it away with the first episode.
Good day, everyone. It's Brandon here, and I hope you're all doing well and having a good festive season. I know it's been a crazy year or two with everything that's going on, and I just hope you all actually get a good, well-deserved rest this season. Don't worry yourself too much with the Bitcoin price and the cryptocurrency price. Go enjoy the time with your family and recharge your batteries. I just hope you all travel safe and that you have an amazing time with your family and that you get a lot of sleep, guys. We really need to sleep to recharge our brains, our bodies, our minds, everything. So I just hope you all have a great festive season. Um, just to start off, in this video, we are essentially going to analyze the Bitcoin price on a more macro time frame as well as a 3-hour time frame. And essentially, our goal with our technical analysis is to essentially give you the macro picture as well as the micro picture, but essentially from a couple different angles. So we'll have short videos where we cover very specialized analysis. So for example, in this video, we're just going to look at patterns. And we want to outcompete or outthink the majority of people. So we want to always bring you content that possibly no one is looking at. If you look at the market, it takes the most amount of money from most of the people most of the time. And if you think about it, everybody's drawing their trend lines, everybody's using moving averages, everybody's using MACD, whale money flow, like maybe not as many people using that, but everyone in the market has these tools at their disposal. Now, if it was that easy, I mean, everyone would be winning. So that's kind of the goal of our channel is how can we look at existing tools and see things that people have possibly missed, look back in history to see how it's performed, and eventually down the line we want to eventually trade with you guys. We will make trades based off our decisions, and you guys will see how our trades do, whether it's good for us or bad for us. We're going to be transparent and actually show you how we trade and if we can possibly win in this market. So yeah, anyways, enough talking. Let's introduce you to some of the cool stuff we've done. So to start off, we're on the daily chart, and the first thing you'll probably notice is we've got white and purple candlesticks. So just to show you that we're forward thinking and we're trying to outcompete everyone, we wanted to choose a color that doesn't make you panic or get too excited. Now, the role of colors can really influence your mind. I mean, if you see a bunch of green candles going up, going up, going up, it could cause you to possibly think you're missing out. Exit your short position and put in a long. It could cause you to get too emotional because the colors are actually triggering you. For example, red is associated with blood and dangers. And when you see a downtrend like this, I mean, what was this move here? Let's say from the top here, from 65K all the way down to 36K. I mean, that was a 55% drop. And if you saw all these candles in red, you could have easily panicked in your position. Instead of possibly dollar cost averaging down or just being a bit more patient and a bit more conservative with your leverage and not panicking and just constantly going in and out and slowly bleeding out your money. And eventually the market came right again. So As you can see, we've chosen white and purple. You know, me personally, when I look at the purple and the white, I don't get excited or scared. So psychologically, we're trying to get our audience and ourselves to not panic and think clear-headedly and level-headedly. So again, you'll see most people, they've got green and red, and we want to be different. We want to innovate. We want to progress in every dimension, in every possible way, and it even starts psychologically with colors. So cool, that was just a quick little intro on that, but let's get to the content. So in this video, we're busy with patterns, so we're only going to look at lines. Now, on the daily chart, let me just auto do this. On the daily chart, you'll notice most people draw their trend lines in a certain way, and the whales and all the people that move the market, they're aware of the lines you are drawing. Now, we need to try and outsmart these people so that we can win. So what is a line that possibly people haven't drawn that could have given them an indication of, for example, what happened here at the 60K or 65K top before we came back down? Now on the daily chart, you can draw a line all the way from, we've got these arrows just representing touches. I mean, this line goes all the way from January 2017, 1 touch, 2 touch, 3 touch, where we actually broke and went to about $3,000. Then we had our relief rally, boom. Again, the same line got touched and acted as resistance. I mean, that's now, where was that? July 2019. I mean, you've got from 2017 all the way to July 2019, and no one had really drawn this line. I mean, it's ridiculous. You're not going to win the market. I mean, whales could have had this line. I mean, it's a whale. A whale can do anything. But I mean, let's extend this line further, and we see it actually touches our 65K about top, and we had a decrease. So this is just to show you how we're being aware of support and resistance and trying to outcompete the market in all indicators. We'll also combine a different bunch of indicators, but for now, the more price action goes towards a line, the more relevant it is and it's respecting it. So on the daily chart, we've hit this line. We've had a decent drop down, and we obviously rallied back up from 31K to what was it, 67. That's quite decent, and then we had another pullback. So in this instance, what can we do with this line on the daily? Okay, if the bull run is to continue, because that's everyone's question so far, if the bull run is to continue, I would recommend we extend this line further. Okay, it's been respected. You can argue that's also a touch there, so you can argue 1, 2, 3, 4, maybe. Let's just do a cluster as one. So 1, 2, 3, 4, 5 on the daily. That's stretching back all the way to 2017. So that's ridiculous. So if the trend is to continue up and we maybe have one more push up or whatever the case is, based off the evidence on this line, guys, I would just extend it out and be wary for the next time it touches it. And I would take profits when it touches the line there. I mean, you can try and take a gamble and stay in. But what we have to show you, we recommend you don't do that. But we're in this zone where we're trying to see, are we going to continue one more leg up, or are we actually going to start a decent correction after this massive move we've had from, let's say, this bottom of 3,900 all the way to 65,000 about, or 60,000 about. I mean, it's 1,578% increase. So let's see, we're in this stage. Are we going to have one more leg up or a couple more legs up and then get resistance again? Or was that it and we need a cool off period? All right, so that's chart 1. Let's go to chart 2. Okay, here we're also on the daily chart, but in this instance, we're going to look at the price from a bit of a different angle. So in the previous chart, we looked at a trend that spanned all the way back from 2017 to look at some resistance and support points. But let's look more at the current price action. So firstly, if we look at the green line here on the top and at the bottom, we've actually formed what you would call a rising wedge. Yes, we would have to extend these lines out further for them to touch, but that's what you've got. Now, typically, you know, when you break a rising wedge, typically the target point is the beginning of the wedge. Okay, that's typically, which would actually be here. So our actual target would be at around 5,000-ish, right? And this is a huge wedge spanning back from 2020, March 2020, all the way to now. We also have this wedge of the line. This is still our main trend line that goes back, but you could draw another pattern and just shorten it a bit. And let's say it goes back from 2018 or even 2019, the top trend line. Now, typically when that breaks, the target is the bottom of the wedge, the rising wedge. Now, we have some stats here. That's from centralcharts.com, so a big shout out to them. And these are general rising wedge stats it's not in the Bitcoin market. Now, in the future, we're going to give you stats that's relevant to the Bitcoin price, right? To make our decision and how we're going to trade and so forth. But for now, let's look at some of these stats regarding a rising wedge from centralcharts.com. So they say in 82% of the cases, the exit is bearish. So in 55% of cases, a rising wedge is a reversal pattern. Now, guys, to form a rising wedge on an uptrend that spans quite far, for many years we've been going on an uptrend, that's showing you that the bullish trend is getting exhausted. Okay, it's very important to notice this on a high level, what's happening. And that's usually a case where when you start printing bearish patterns in your uptrend, it's a warning sign that, hey, market structure is changing, something's happening here, we need to be wary. Okay, so let's carry on with the stats here. So in 55% of the cases, a rising wedge is a reversal pattern. In 63% of the cases, the pattern's price objective is achieved when the support line is broken. So in 63% of the cases, guys, the pattern's price objective is achieved when the support line is broken. So that's very interesting, all right? And in 53% of the cases, the price makes a resistance pullback on the rising wedge support line. Now, this is tremendously interesting because it ties into our head and shoulders pattern that we have highlighted for you guys as well. So in 53% of the cases, this price action will come back to kiss this rising wedge, the bottom line of the wedge, as resistance, to basically confirm it as resistance, right? And so it depends. Obviously, the line can get extended out, but price action could very well come back and kiss this line at 60K, at 55K. Depends where the price action goes to actually confirm it as resistance. Now, this is extremely interesting because if we head on over to our head and shoulders, here we've got a potential head and shoulders forming. So if we look here, if I had to draw let's see what it could possibly look like, this head and shoulders. So we've got that. Let me just stay in drawing mode. See if I can draw another one. I don't know what I want to draw now. Okay, let's do another one. Okay, so there's your potential left shoulder, your head. And now the question is, are we going to print a right shoulder and actually confirm this as a head and shoulders? So let's say it goes up to our rising wedge trend line. And I like this theory because it's a potential head and shoulders that's forming, whose right shoulder might also be the touch point on the rising wedge to actually confirm it as resistance additionally. So you've got a main rising wedge pattern that might be that's actually broken now, but the question is, in 63% of the cases, it can actually go back to the bottom of the top of the bottom of the wedge to actually confirm it as resistance. So if I had to actually show you guys, here's the bottom of the trend line of the rising wedge, we've broken. Okay, so the first check mark has been reached. Now in 63% of 53% of the cases, sorry, a resistance pullback can be made where it actually comes back to this rising wedge line to confirm it as resistance, and then we start our descent, and the price target would be the bottom of the wedge, which is around $5,000, $4,000. So I'm liking the confluence here that we have the rising wedge, it's broken, but we also potentially have a head and shoulders. And currently we could be forming our right shoulder to also then confirm that resistance and confirm a larger pattern and head down. Now, if I remove this quickly for you guys, let's look at some stats regarding the potential head and shoulders we could be having. So if we look here, this is also from centralcharts.com. In 93% of the cases, the exit from the head and shoulders pattern is bearish. In 63% of cases, the price reaches the objective of the head and shoulders pattern when the neckline is broken. Now guys, the neckline is important because you could have a slanted neckline. So once your potential right shoulder is done, it depends where price moves up from here. But just to draw just a kind of example for you guys, let's just change this to green. You could have a actual horizontal neckline. So in other words, price must still go from here, where we are now at what, 48.5, and come down to about 40 or 41, which would also tie in nicely if you extend this line further with other areas of resistance and support. So that would also be good. But anyways, so you could have a horizontal neckline, or you could have a slanted neckline, which is similar to another area which I'll show you now, in which case we've actually formed our neckline and we're about to go do our right shoulder and head up. Okay, just as an example, on the way down, here's another head and shoulders that we could have looked at over here. Similar thing, you had your left shoulder, you then had your head. Let's actually zoom in a bit more so you guys can actually see this nicely. Similar here, you had your left shoulder, your head, your right shoulder, you broke the neckline and you hit your target. So we know the rising wedge target is at the bottom, but that can take many months and so on to play out. So what's the measured move here? If we go from the top of the head to the potential neckline, let's assume it's a horizontal neckline, and we put it by the neckline, about there, then the potential target would be around 14 or 15,000, which is nice because again you had a lot of price action here in the middle of that area of the 15,000 area. All right, so that just to give you a broad picture of what's going on there. Now let's move on to the, I believe it's the 3-hour chart. Okay, so what do we have here, guys? We have a potential falling wedge. Okay, now we won't go too much into this just as yet, but just to point out to you guys, try and draw lines where you can get most of your touch points. Just if I had to drag this touch point, you see here we get many more touch points for the bottom of the line. Sure, it's not pretty, but you get a lot. I mean, you get 1, 2, 3, 4, 5, 6, 7, 8, right? And then the top of the line, we have like 1, 2, 3, 4. We could be potentially heading up there now to do our 5th touch. Now, if you drew this wedge like here, let's say you started your pattern here. And this is what most people do. They'll maybe draw a pattern like this. This can distort things. You know, let's say I did this. You might think, oh, okay, we're forming a little... Let's actually draw something else. Let's draw it this way. This is how most people seem to be drawing it these days. Now this is very dangerous. So why is this dangerous? If you don't draw it out further, you're not going to potentially see, you know what, this bottom line actually got touched way more than the top line. I know price is breaking out now, and you could potentially argue that we're on our way up, which would be, I would like that, because we'd form that head and shoulders we're talking about and confirming resistance on the rising wedge we spoke about. But in any case, just to give you guys another tip, when you draw it like this and you don't extend it out, right, you're actually going to miss the fact that firstly, the most touch points has actually happened on the bottom line. And the more often that price tests that line, it tends to become weaker. It keeps hitting that wall. So it's definitely advised to see how many touch points can you get when you stretch it out. And, you know, if I look how we draw this here, it was actually there and there. Okay. So we've got our support lines here. Let's just draw it nicely for you guys. There we go. Then we stretch it out like this. Now you get a bit of a different picture because you didn't go on such a micro level that you missed the higher level. Even in the 3 hour, you could have drawn a very small little pattern over here, which isn't the end of the world because it can break out and still be valid. But it's nice to know that you have this overarching resistance here at the top, which could be another price point for you, and you have this bottom resistance that has had many touch points, you know, and the more it touches it, the more it's going to break it. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, it's 9 touch points. And this top trend line, it's what? 1, 2, 3 touch points. We might be going for our third. Now, obviously, you have to look at volume and various aspects, but for now, we're just going to stick to pattern trading. And yeah, so that's another tip for you guys. In the next video, we just want to keep these videos short and just show you what we're about. We're trying to constantly innovate and think outside the box and give you guys some heads up. And in the future, we're going to give you stats of these patterns regarding the Bitcoin price, and that's for any indicator, whether it's the RSI, divergences. How many divergences do you need before something plays out on a certain time frame? How many if you combine the pattern you're looking at and a moving average, what's the chances of a fake out? Time analysis, where you see a trend on a certain time frame only lasts perhaps 3 days in one direction before reversing. So this channel is going to be very forward thinking, and we're really going to think about how can we outcompete the whales and institutions in this market and show you stuff that no one else is possibly seeing. I know you know how these lines work. This is just an introductory video, but we just want to show you that we're forward thinking and what we want to achieve on this channel. And eventually my colleague and I are going to do trades with you guys, and you're going to be able to see how do our trades play out based on our analysis. And whether we do badly or good, we're going to be transparent and you're going to see it. We're not going to not post it if it's a bad trade. You're going to see our trades, and we're going to see, is the strategy working or is it failing? And then hopefully we can then make money together. But yeah, that was basically it for this video. Just to summarize, keep out for this long-term trend that's formed for many years. If the bull run continues, we could be heading to that line again. Secondary, be careful of the rising wedge that we have, the potential head and shoulders that could be forming and meeting us at the right shoulder of the head and shoulders that could be forming, and resistance of the bottom of the wedge. The target for that will be around 5,000. And in the shorter time frame, be wary how you draw the lines. It can really influence how you analyze something. But in any case, guys, I hope you've enjoyed this video, and in the next video we're going to do EMA or moving averages, basically just to show you what we've seen there, as well as liquidity blocks and wicks, just to show you some interesting stuff regarding that. But I hope you all have a good day and have a good festive season, and please give your input on the video. Let us know what you like, what you don't like, what do you want from the channel. It's very important that we hear from you what you want. But overall, guys, take care, and we'll see you in the next video. Bye bye.